Weird choice. All right, there we go. Welcome everyone to the Figure Sales Success webinar. Gentlemen, how are we doing today?
Excellent, excellent. I am in our corporate office location. I'm not in the Sales Success Studio today. I'm in San Francisco and one of our corporate offices out here. So it's a beautiful morning here so far.
Doing
That
well,
is
doing
great.
well. Excited. Let's get it going.
How about you, Reef? Is it snowing out there in Reno?
No snow, fortunately. Thank goodness. We'll take it. It's actually a beautiful, nice, crisp day here. So we'll
Yeah,
take it.
nice. Well, listen, couple of housekeeping items, and Alex, you might have already said this already. I'm not sure, but where do we want folks posting any questions? Do we want them using the Q&A? Are they
Correct. So, a couple things to note. Number one, there is going to be that Q&A section. So, for any questions, please post it in there. We're going to be doing a dedicated Q&A here later on. We have some exciting things we're going to be showing and demoing for you, and then we're going to be diving into Q&A. We're going to try to answer all of your questions during this session. There is quite a few people on this call, though. If we hit time, we are going to follow up with an email as we always do. So if we can't get to every question, we will be answering everything. Don't you worry. I'm also going to be sending out, like I said, an email that is going to have documentation on what we're going to talk about today, some fun handouts I made. This is being recorded. That recording is going to go on YouTube, hopefully sometime today when I process that recording, as well as some great more information. And if you're on LinkedIn, hello, thanks for joining us. All right,
That's
Tim, what are we
awesome.
going to be talking about today?
Well, I got to tell you, Alex, this has been honestly a long time coming. I think everybody in attendance is going to be really excited to hear about this and then, of course, see it firsthand. It actually went live last Friday. We haven't really talked about it too much until this webinar, so some of you may have already noticed this, but I want to kind of paint a picture and go back in time a little bit. A little over a year ago, when users of the lead portal and inquiry tool, for lack of a better term, I'll say that loan originators, and for those of you that don't know, remember, I've been a loan originator at some level or another for the last 25 plus years. So as I came on board and we started having these conversations of ways we could improve, first and foremost, we received feedback from all of you, all of our partners and their sales teams. And when I say we take that feedback serious, that I really mean it. We actually want and continue to want to get your feedback. So this last year, we've made some enhancements to the lead portal. First, we had the enhancement, which you might remember, we had the milestones. When you're in a particular details of the file, you would see the milestones. Green check marked indicated that was done and the borrower is now moving on to the next milestone and what was happening. But that's about as transparent as it became for you as a loan originator. Then we added shortly thereafter an LO dashboard, which now is in fact your home screen. When you as a loan originator log into the lead portal, that is now your home screen, and that shows you your pipeline data, how many inquiries you have, how many applications you have, how many are in notary, how many, very important to note, how many files may be getting ready to expire. My point to all this is not to completely beat up and revisit everything we just did this last year, but how that's led us to, again, from your feedback, to now the latest, greatest expansion. And so I'm going to give you the verbal on this, team, and then Alex is going to demonstrate this for us. So what we've just launched is now in the LO file in the details. We'll call it the LO details dashboard or conditions dashboard. I think it'd probably be the right way to say that. Now what will happen is if one of your homeowners is working through the process, and let's say they're asked to upload a copy of their ID, and their ID doesn't pass. And yes, let's just deal with the elephant in the room. We see that happen a lot. By the way, a little side note on that. It's not a person signing off on the ID. It is a software signing off on the ID. So, okay, maybe the borrower uploaded one that was blurry. Maybe it was a PDF, not a JPEG, whatever the case is. Now, as of now, the loan originator will now have the opportunity to log into the lead portal, go to the dashboard, and upload the condition on behalf of the borrower. That is huge. And actually, Alex, are the email notifications live yet, or is that still this week?
Not yet. So we are going to make those live later on this week. At worst, it is going to go live early next week. They're still kind of playing around with the templates from what I hear. So don't you worry, give it a couple days and boom, you are going to be getting email notifications so you can immediately go, oh, got to jump in there, help my borrower. Let's get this, expedited as quickly as possible.
Yeah, and what's so powerful about this, so just again, when you log into the lead portal next time, you run your inquiry, your borrower's got offers, you hit proceed, the borrower's working through. Now, if the borrower uploads something and it doesn't pass, again, we'll use the example of the ID, you, the loan originator, will get an email, so will the borrower, by the way, saying, hey, we still need you to upload your ID. The difference is now is you, the loan originator, will be able to log into the lead portal, which Alex is going to demonstrate here in just a moment. And if you have a good quality copy of, in this case, the driver's license or ID, you, the loan originator, will be able to upload it. Now, Alex and Reef, I'm happy to share something with you. I actually helped a loan originator with this exact scenario yesterday. And it was really fun to watch this live in real time. So the borrower had uploaded an ID. Well, what did they do? They scanned it. It was a PDF. And if you don't know, that won't pass. Just so you know, it's got to be a JPEG, a PNG file. It's got to be an image, right? So the loan officer had the image. They logged into the lead portal, went to the conditions dashboard, uploaded the ID. And while I was on the call with the loan officer, the condition was cleared. So since this rolled out, without even having talked about it since last Friday, there's been well over 100 conditions uploaded by LOs. This, to me, do I seem excited at all, you guys?
I think you do, and I'm excited too.
This is a fantastic step in the right direction. And again, Alex, like you pointed out, and I know you talked to the engineering team this morning, that the LO notification emails that a condition is needed should be end of week, if not early next week. So that's the last piece there, but the conditions dashboard is up and live. And so, Alex, if you could maybe just show them how that's going to work. And Alex, I want to make sure that for those loan originators that may not be aware of how to get into the details of a transaction. I oftentimes find that being missed, right? They don't know where to go in and see those pieces.
Absolutely. Let me go ahead. So what I'm going to be sharing here is our lead portal system. So sharing my screen, this is in our lead portal. Now, some of you as partners, right, you may have referral codes that you send out. Maybe you have done inquiries before, right? That gets the borrower on the path. They're still going to be the ones who have to do the application. But in lead portal, again, you can track everything in real time. This is the pipeline view on that left-hand side where you'll see everything. Newest at the top, but of course we have filters like any good website, so you can see anything to your heart's content. But what you can do is you can jump into the details of any inquiry, any application. It's going to tell you all of the details that it has, where it's at, where it's going. So for example, we have this, let's say inquiry here, right? It's a borrower notified. I just completed the inquiry. Awesome. Of course, I can always go ahead and resend them a welcome email. There was kind of that copy borrower link if I wanted to go ahead and put it in my own email. But if I want to see the details of this inquiry, if I want to see the AVM value, the FICO score, if I want to see what the system pulled, as well as maybe the initial offers, right? That's all there for me as a loan officer, and it's going to be archived there for you. Same thing with applications. If we want to go into the details, that's where those conditions will be. That's where the progress and all the information will live. So we're going to click on the little 3 dots button is the way I call it here, right? We're going to click on this options menu. It's going to pop up all the options we have on this file here in the pipeline. And then I'm going to click on details. Boop. That's going to then bring us into the details. Now for this, what we're going to be looking at is we're going to be looking at actually an application. We're not going to be looking at just an inquiry. So what I have for you today is I have an application. This application, as we can see, has progressed on this right-hand side. We have gone through income verification. We have gone through, they've selected their disbursement account. They have done an identity verification, right? They've gone through, they're at note signing. Awesome. You can see they're getting closer to the end of this application. But oh no, it's like a stop sign. Yellow, something happened, right? Green is good. Red usually means they got declined or stopped for some reason. Maybe it expired because, soft credit's only good for 14 days. But yellow means, hey, there's something that we need to do. And that's where those conditions are going to live. So we'll see conditions needed. And this is where we're going to be able to go into a new tab. So starting let's say past couple days when this went live, like Tim said, we've already had like a couple hundred of these come through. We'll have this conditions tab here. You can now click on this. That's where we're going to be able to see what conditions are pending. Now, what's important about this to me, I want to preface this. This is not going to tell you, hey, we need this 15 things to be done, right? At the start of an application. This isn't going to tell you that. What it's telling you is saying something happened to where we need more information. So if a borrower goes through an application, everything's fine and perfect, they get it done 10, 15 minutes, great. There will be no conditions, nothing for you, your borrower to do. They just get it done, go to notary, life is good, life is easy. But if we need something else, something usually outside of our system to help us clarify information, or in this case, their ID failed to verify, that's where a condition will appear. Your borrower will see it on their application. It's a little alert that says, hey, there's something that needs to be done. You may have seen that before in the past helping with borrowers. Now, you as a loan officer, that's where you can go in and help them. So in this case, what we actually have two conditions here. I was kind of playing around with this. We have an ID that was requested from the borrower. It went through our system. Well, here's what happens. A lot of the times with borrowers, they'll upload a bad ID photo, and it is an automated ID verification, right? Maybe it's cropped weird, so half the information's missing. Maybe there's glare, maybe it's too far away, whatever it may be. So then this condition pops up, it alerts the borrower, it says, hey, we need a new ID photo to verify in our system, right? Because again, no human eyes are looking at it. It's an automated machine. So it's saying, hey, we just need a new ID photo. Well, what happens a lot of the time is borrowers, they upload the same ID photo. They look at that and go, I already did that. And so they just like, well, here, just do it again. And that's where it can go through, fulfill the condition, but then it'll fail again. Well, the same condition can pop up. We can go around in circles, round and round. But that's where you as a loan officer can come in here, be their hero and say, all right, let me take a look at it. So we're able to go ahead and say, okay, we need a new ID photo. I just click on that condition. It's going to let us know what we need for this. So in this case, whatever it may be, we'll say document type. We just need the front of their ID, by the way. I'm going to see if they can remove, it's going to say back on here. Just the front of their ID is fine. We can do driver's license, ID, passport, or permanent resident card, let's say. So I'm going to have their driver's license, let's say. Maybe I cropped the photo a little bit. Maybe I just took a new one, helped them out, requested it from them, however you work. In this case, I just drag or drop that file in. We're going to hit submit for review. Boom. Just like Tim said, it's going to go over to that automated verification system. And great, we get that cleared instantly.
Yeah. And, Alex, again, it was really fun for me yesterday. I got to watch this work live right in front. In other words, I logged in, the LO was in the lead portal doing their thing. And all of a sudden, I saw on my end, as an admin user, I saw, oh, condition cleared. And I thought, now that is awesome. So, and by the way, it's going to be specific to the condition. Maybe it's a certificate of trust. Maybe it's a bank statement to evidence account ownership. The conditions could be different, but the win here is that you, the loan originator, will have the ability to upload them and assist your borrower on their behalf. So a couple things I want to add to this for everybody here. I have had it come up already where I've had a few loan originators say, well, can't we just do this at point of inquiry? We know they're going to need their ID. We know they're going to need the certificate of trust. We know they're going to need. The answer is no, folks. You're going to have to wait until it's conditioned, and I'll explain the why behind that. Remember what I always say, do not think of this process having anything to do with what we all know as a traditional loan process. In other words, I want to set the right expectation. You're doing the inquiry, you hit proceed. The borrower now is the one that needs to get engaged. So we're not going to have a platform that allows you to submit a loan like you're used to submitting. First and foremost, most likely you would submit way more than we'll ever want. Okay. And remember, we don't have underwriters. So we're reacting once the borrower has reacted. Once the borrower has engaged on the link, they're working through their application workflow, choosing their offers and so on and so forth. And a condition pops up, it's at that point that you, the loan originator, will be able to go in and help the borrower satisfy the condition. So I hope that you know, it kind of separates the two processes there, if you will, from a traditional loan experience versus our. We're not submitting at point of inquiry a loan package. So don't think of this as your opportunity to upload a bunch of stuff. That's not the point. The point is giving you the ability as the loan originator to assist your borrower when there is a condition. And by the way, most of you may know this. A lot of times there are not any. In other words, the borrower takes the photo of their ID with their phone, uploads it, it passes. The borrower links to their bank account, it passes. The bar, you know, so most of the time this is a non-issue, but I still think this is a big win.
I also want to add on as well, saying this, right? The ID verification is done by an automated system. Not everything is, right? There are still humans. We have that operations center. Most of these conditions are going to be coming from requests from that operations team. They're going to make specific requests if they cannot clear it without proper documentation. So it just depends on the scenario. If we can do it, make it easy for the borrower without requesting anything, we will. But if it's like a situation where we just are like, all right, we just need a marriage certificate on file just to get this cleared, that's where usually like a condition will come through. So same operations team you've been interacting with, there's going to be a phone number, chat functionality on the application. Borrower can call in with questions. You all can call in with questions, right? But this is to make it so you don't always have to call in, be like, what's going on here? You can just look at that and go, oh, they need a marriage certificate. Great. I'm going to put it in here. We're good to go.
Yeah, by the way, team, and you too, Alex and Reef, you may not be fully aware of this, but loan originators will be. And that is, it's very, very common that if they're doing a HELOC for one of their clients, it is in fact one of their past clients. And some of this data and information the loan officer actually might already have. And so now it might make it much easier for them to assist the borrower in uploading those conditions. So yeah, like I said, pretty big win. And then again, the email notifications to the LO should, let's just say early next week. And if it happens this week, well then, awesome.
Exactly. And one last thing to add on to that too, right? You're going to have your documents tab like normal. Just know that everything that's going to be uploaded is going to be in here. So if you upload a condition document, it'll be in here. Same thing with like the ID and all the documents the borrower uploads for those conditions, so on and so forth. So just keep that all in mind. If you see a little upload document section here, that won't fulfill a condition. Keep that in mind. If we're asking for a marriage cert, you put it in here. Don't do that. Fulfill the condition.
Yeah, I'm so glad you brought that up, Alex, because it's very true. When you see that documents thing, you could, in theory, you could go in and upload stuff right early on in the thing. However, Alex just hit the nail right on the head. This part of the portal is not going to trigger review of any of those things. So sure, you're uploading it in there, but really no one would know. So follow that conditions tab. That's the best practice there.
Exactly.
So before we jump on to the next segment, I think there was a couple questions, and I don't know, Reef, if you've already been answering some or not.
Yeah, there's some live ones in there. Bob is asking if the photo ID is the only document an LO can upload.
Well, of course, we love our friend Bob, and the answer is no. Any condition that is being tasked for Bob, the LO will be able to upload, and everybody else, not just Bob. And then Wendy also asked, they have a file in the system, and the only condition in the file was to upload the back of the ID. Wendy, we've got to get this corrected, because we actually don't want the back of the ID. What we're actually looking for is the front of the ID. So I would say go ahead and upload that, but just choose front of ID. Okay.
Wendy,
Oh,
just
and when he said,
shoot us an email so we can look at that file a little more closely. It could be a mistake.
yeah, it could be a mistake, or maybe it's not passing. That's my take on that. The one that I helped an LO with last night. Sure, the ID was in there, but it was a PDF. It was not a photo image. So
And,
the LO.
and again, it is an automated system. Please keep this in mind. It's not perfect. I had spent years dealing with this in a previous life. The big thing is you need all four corners showing of an ID, right? However you want to do this, wherever the webcam is. No glare. It needs all text visible, no backgrounds. I used to do a lot of trainings myself on acceptable IDs for a system we call MyTech that we have hooked up. you know, if an ID does not pass, try again. Try to recrop it. You know, maybe try to take a photo on a clear dark surface, right? A lot of times barbers put it on like a white piece of paper, that can mess it up. So keep that in mind. I'll probably make a document that has all these details in there about that. Really though, just know for the ID verification, that could happen a couple times. We just need it to pass. You know, I could look at it and be like, that's clearly them, but we just need it to pass that system.
Okay, cool. So we'll get to some of these other questions in a minute because I want to stay on track here. But team, you might know, but we also have a few other interesting things that have happened at this same rollout of this latest, greatest iteration, I'll say. And so I want to cover it real quick. And I don't have a way to illustrate this, everybody, but for all the loan originators on the call, as best you can, and please give us some feedback through the Q&A here. I want to walk you through a concept, and we just launched. We now have aggressively priced first lien HELOCs. Now, why would we do that? We did that because we believe there's a need in the marketplace to handle low balance loans. So why is that important? Well, myself, and I'll back up a few years when I was, originating loans full time. One of the things that became very painful for me as a loan originator was if I had a lower loan balance, let's say a $150,000 loan, and I'm in the wholesale world and I'm getting paid broker comp, lender paid comp on the backside. The problem I ran into was that the interest rate, even when someone doesn't own anything on their property and they're doing a $150,000 loan amount, let's call it 50% LTV, that is still considered a cash out transaction. And what would happen as a result, the loan level price adjustments that we all love and near and dear to us would drive the rate up. And very, very quickly, all things thrown in, we became a high cost loan and virtually had no ability to do the loan. So what would we do? We would flip it from lender paid to borrower paid. However, when that happened, guess what we had to do? We had to reduce the amount of borrower paid comp to still meet the high cost threshold. And in most cases, they become losing transactions. Now, I'm not here to promote we should only do loans for people that are where the company and loan originators can be profitable, but it is something to be aware of. And we believe that there is a need for low balance loan options. And that is why we just rolled out same time on Friday. Actually, maybe first lien pricing went live last Tuesday, a week ago yesterday.
Yep.
So here's my messaging. The process is the same as usual. Process equals product, right? And I say it time and time again. And so it's the same exact lead portal inquiry tool process. Just know that if you have a property and a homeowner that is owned free and clear, even when you're going the agency route, I don't want to curb you away from that. But what I do want to encourage you to do is also run an inquiry and compare apples to apples. Because when you look at the costs associated with a traditional agency loan versus, remember, our costs are only figures origination fee and notary where applicable. That's it. There is no escrow, title, appraisal. None of those things exist because of our process. So really dive into that and take that into consideration if you're up against especially high cost loan scenarios. Great opportunity here, especially for investment properties. A lot of folks own homes outright, both primary and investment. However, they have a need for cash. The number one largest use case for us still remains to be debt consolidation, home improvement after that, and then use cases start trickling down after that. So my messaging there for you all is that even though a homeowner may own their home outright, make no mistake about it, homeowners have a need today, and that need is in most cases cash, again, for debt consolidation, home improvement, maybe buying an additional property, whatever the case is. So in that potential scenario there, be sure to use the inquiry tool and price out that first lien HELOC. I think you'll be pleasantly surprised. I actually just priced one, Alex, just a little bit ago this morning, and it was 50% loan to value, 740 FICO score, and it was 7.55%.
That's
So I,
oh, go ahead. I was just going to say
well, I was just going to say, that might be right at maybe a little bit higher than a cash out agency transaction, just depending on everyone's FICO LTV. There's a ton of different paths there. But my message here is use the inquiry tool and price out that first lien product, because you may be pleasantly surprised. And of course, much, much faster for your borrower as well. Now, having said all of that and thrown out there my belief of the power of the first lien product, we also rolled out, and I'll go back in time here a little bit. Remember, we added what we call the IntelliDebt feature, where literally at point of inquiry, you, the loan originator, even when you have offers, you could select, yes, the borrower wants to pay off this, this, and this. Great. They could either take it out of their proceeds or keep their offer intact and add it, increasing their loan amount, assuming that their DTI and everything was fine. We then launched the same IntelliDebt feature, but from a win-back scenario, saying that their DTI was too high, they didn't get any offers. However, if they paid off this and this, then that would result in offers. And at the time, the debts that we were giving DTI credit to were auto loans, personal loans, and home improvement loans. The ask from all of you was, when are we going to be able to relieve DTI when paying off credit cards? Well, we're doing it. It went live on Friday, and there are some caveats there. The first rollout of this so far where we're at is the borrower needs to have a 680 or higher FICO score. Okay, so that's the big one there. And if that's the case, then now when you pay off credit cards, we will actually give DTI credit to that. And if anyone asks the question, I'm not looking at the Q&A right now, but we do not close the accounts. Okay, so if that's a question for any of you. So a lot of moving parts here, but a lot of stuff to really be pretty jazzed about.
I think so, Tim. And I want to take a step back here and kind of talk about something you were saying with the first lien HELOCs, right? I think you should pretty much always do an inquiry, right? Because it takes a minute or two. On that inquiry, what you're going to see is you're going to see, hey, the pricing above reflects, 50 bips here right now for a first lien HELOC. You're going to see that rate discount very clearly. What's even better about this to me, the big thing I'm excited for is on first lien, we can do 80% CLTV for secondary investment properties, and that goes up to $400,000. So this can be really, really good if they own a secondary investment property outright. Do the inquiry, right? Get in there, see what the fixed rate's going to be. You can adjust in real time, kind of play around with this, but you're going to be able to see, all right, cool, we're getting that discount. And again, we're going to adjust that, give you the better CLTV and everything that is there. And then, of course, like Tim said, big thing also, credit cards helping with DTI pay down. That's another really, really big one. And that's thanks to Tim, honestly. Tim really spearheaded that.
No. It's thanks to everybody on these webinars and for the calls and the emails. And again, I'll say it ad nauseum. We want and appreciate and take action with your feedback where we can. And so keep the feedback coming. It's massive improvement so far as a result. So let's dive into a little bit of Q&A here. Reef, did you just get rid of that one question because we had answered it?
Yeah, but I would like to touch on it. It's specifically asking if if you have a borrower who's going to be consolidating debt, and they do choose to pay off debt, do they have the option to increase that line and keep and preserve their cash amount, or would it reduce their cash amount?
It's really up to between the loan officer and the borrower to make that decision. Both options are available. Now, they can add it to the loan amount, preserve the initial offer amount. So let's say 100,000, but I'm paying off 10,000 of debt. The new loan amount would become 110. Okay. Or they could say no, take it out of the proceeds, and now the disbursement would be 90,000 to the borrower because 10 of the 100 is going to pay off the debt. So it's either or, assuming that they still qualify from a DTI perspective. In other words, if they get an offer for 100, and if they pay off these three debts, and say they want to add it to that 100, as long as the DTI works, the system will seamlessly roll right through it.
Mm-hmm.
And just to touch, their comp would be based off of the total line.
That's correct.
Mm-hmm.
Total drawn amount. So remember, you have that 100,000 scenario. If it was a 299 origination fee, that HELOC would actually be, I'll just round up a dollar and say 103. The comp would be paid on the 100.
And we can see that on here too, right? So when you're selecting those accounts to pay off, same with the borrower, depending on their offer, right, they can preserve that initial draw or deduct it from the initial draw. So just like Tim said, really up to the borrower. But if I wanted to say, all right, I'm gonna pay off a personal loan, deduct it from that, loan amount, awesome. We're gonna see their full disbursement. We're gonna see fees plus that personal loan being paid off for that total loan amount that we can see.
Yeah, that's awesome. By the way, Ali asked a question, Ali, regarding a note under the dad, but under her name. I want to make sure can you reach out to the team, please, post webinar, and so we can dive into that. Reef, can you take that one with Ali? Just because I want to make sure we give the right answer there, and check ownership, or if there's.
Yeah, it would really come down to who was on the deed can apply. Any title owners can apply. Again, remember, no co-borrowers. Reach out to us. We can really clarify this, but just as a general rule to everyone on the call, right, it is who is a title owner can apply, who is on the deed, and no co-borrowers is what I like to say. But
Yeah, so
income, so that is
there's another great question here. And the comment is this: at a previous company, I had a customized link. And what this loan originator is referring to is what we call an LO referral link. And in our retail models, we have some retail partners. And in the retail space, that is an option. In the wholesale space, it's actually not an option to have an LO referral link. And I'll explain the why. The whole reason Figure even has an inquiry tool is because of wholesale loan originators, because in that world, you have to do, I want to say it's 5 or 6 things to justify, from a RESPA perspective, compensation on a file. So that is why in the wholesale channel, there is not a direct link. In with our retail partners, there is that option. So Michelle, just depends on where you're at now. And again, you can reach out to the team and we can help you navigate that, and see how that works for you. And she also says, do we have a streamlined income employment verification? Well, we absolutely have a streamlined income verification. So in our system, remember, you're going to indicate that they're full-time wage earner or they're self-employed. Let's go with the easiest path, wage earner full-time. Okay, great. Good chances are that borrower's income is being deposited into their personal bank accounts. That's what we instruct the borrower to link to verify income. The tech and the process simply looks at payroll style deposits, has a gross up calculation to it, because we all realize people get paid net. So it does gross it up, and then says, oh, Michelle, the amount you stated for their annual income, yep, based on their linking to their bank statements, looks like it makes sense and they're moving forward. That's it. Now we will actually review pay stubs if necessary, if they have a bank account they can't link to. And we can also link to tax transcripts. So a very, very thin process, if you will, skinny process. I'll use loan officer lingo here for a second, like submitting a skinny package, right? In our process for income verifications, that's really what it comes down to.
And I want to add one thing on there, because I'm going to say this 100 times during the session. Remember, you can include spousal income. And what's nice about that is we do not pull credit for the spouse. So joint checking accounts, joint taxes, they can upload their spouse's pay stub, right? They have to be in a community property and homestead state, which is most of them. I think there's only 17 states that aren't. I'll send out the documentation of that information after the session. But I see a lot of loan officers who will only put down their borrower's income information when they could have included the spouse and help them qualify for more, or just qualify in general. So double check that, because it's a huge benefit.
Great point there. And there's some ways to strategize around that as well. And then Harry asks, any limitations if deed is in an LLC? Right now today, Harry, yes, we're not doing files that title is held in LLC. However, I will tell you, I believe that it's coming soon. And here's why I believe this. I'll tease everybody here a little bit. I was at myself and some Figure executive leadership we were at the DSCR conference last week in Florida. Now, why is that important? Why would Figure be at a DSCR conference? Well, we're probably about 45 days from rolling out a DSCR. And here's where it comes back to the LLC question, Harry. We're going to be doing those transactions in LLCs, title ownership. So logic tells me, hey, if we can do it there, then I need to push to do it. So more to come on that. So that's just a little teaser. And can this be done on a purchase? The answer right now today is no. It cannot be done on a purchase. Now, having said that, we do have tons of loan originators that will use this product on a departing residence to facilitate the funds to make the full purchase or contribute to the next forward purchase, whatever the case is. We are also working on a piggyback program, both for purchase and refi. That is coming very, very soon. We actually have it built, everybody. But there's some real differences between retail and wholesale that we're trying to navigate and work through that. But pretty excited about that. And folks might say, well, why would you do a piggyback refi? Now, again, I've been in the business a long time, and we used to do this regularly, very, very commonplace years ago. You may have a borrower that has that 7.75% interest rate that bought their home over the last 2-3 years. Interest rates have come down. They're absolutely going to be able to take advantage of lowering their rate if it's rate and term. So the minute you go cash out and start adding the loan level price adjustments, that's when things get a little wonky. So if you think of this as a scenario from a refinance perspective, they're refinancing into a 6% new rate and term loan, but you're also adding the piggyback HELOC on the back end just to facilitate the homeowner's cash needs. So pay close attention. That's going to be, we're pushing to get that live with some of our partners as we speak. So with the points being charged, the fees would surpass a normal cash out fees. Scott, you bring up a good point. I don't know that that's the case. And so actually I do know. I just priced out a cash out transaction a little bit earlier. Keep in mind that depending on your model, depending on what sort of retail, wholesale, what sort of high cost loan thresholds you're held to, in most cases, even the lender paid comp is taken into consideration in the wholesale world when factoring high cost loans. So as you work through that, plus escrow, title, appraisal, notary, all the other fees in there, make sure you do an apples to apples comparison. Will it work every time? No. And I'll be the first to tell you that if you have a better deal with an agency loan for that homeowner, absolutely that's the way you should go. But just make sure you compare them side by side. I think you might be pleasantly surprised. And then, of course, because of our product type, remember, because we're dare I say, a hybrid, right? We look and feel like HELOC from a sense of full draw, fully amortizing, fixed rate product. But we fall into the HELOC category as a result of the redraw feature of bringing monies in and out. And that open-end deal like that, the high cost rules change in your favor. So kind of keep that in mind as well. Can we pay off debt to qualify? Yes, certain debts. Remember, now credit cards, car payments, personal loans, and home improvement loans can all be paid off to help qualify. And taxes owed in 2023, federal taxes. Now, I will tell you, this is an interesting question, Casey, that you've asked, and I'm glad you've asked it. And I don't know that I have the right answer, but I will tell you that my logic tells me it depends on whether or not we see that as a debt. In other words, I don't think you're going to see that the tax debt show up on a credit report as a liability to pay off. I'm pretty sure you won't see that. Now, whether or not it becomes an issue for us is whether or not it shows up as a lien on the property, not on the credit or anything of that nature, but on the property. So again, when you run an inquiry, if you're not seeing it as a lien, if it's not showing up on the credit as a monthly liability, then honestly, no harm, no foul. You'll be able to move. Yeah, Alex or Reef, do you have anything different on that?
No, yeah, I think that's absolutely on the nose there. So honestly, really do the inquiry. And again, in the details, it will show you what liens are being pulled. So you'll be able to see that information on there as well.
Yeah, so Michelle also asked, okay, so first lien to 80% CLTV. By the way, we will go to 85 on first lien on primary residence and 70 on investment or non-owner or second homes. And so first lien to 80 CLTV, 400,000 to pay off debt and not count in the ratios with a 680 score. That is correct. We're if you're paying off debt that falls into that category, 680 or higher FICO, credit card DTI, and as well auto, personal, and home improvement loans will give DTI credit for. Yeah, and Shane, hopefully I just answered that question, but we will pay off auto loans to lower DTI. By the way, we could have this debate, and I think it's just more indication that the pain is real, everybody, for homeowners. Well, for anybody right now in our country, cost of living and debt is a real issue. And so I could say we could have a debate about, well, someone has a 7-year car loan. Why in the world does it make sense to pay it off with a 30-year fixed HELOC loan in this case? Well, from a financial perspective, maybe it doesn't. Maybe the advice would be, gosh, you guys will have this paid off in 7 years and just stick to your guns, add some extra payments, whatever. That's where your education and advice of your borrowers and the strategies come into play. The reality is, however, the average car payment, I want to say, is north of $900 a month now, whereas that amortized HELOC paying off that car because of the 30-year amortization, it's going to lower the payment. And let's be honest, payment is the issue for so many homeowners. So,
and that is always my belief, and that's what I always stick to, is the most important thing these days is going to be the payment. So again, on the inquiry, you'll be able to see what their monthly payment is going to be broken up, and that is factoring in them not taking redraws, right? So you'll be able to have a conversation with them to say, hey, does this make sense? Will this help you, with your cost of living, so on and so forth. And again, just a soft credit pull. So if they decide not to or go with something else, that's fine.
Yeah, listen, folks, as long as I've been originating loans and who I am as an originator, and I'm certain so many of you are too, is I really, really focus on educate, advise, and strategize. It's not for me to decide what is the best scenario for a client. It's for me to educate a client as to what their options are and let them make an educated decision. And so really focus on that. And hopefully these expansion of tools, remember, process equals product. I've been saying it for a while. Our process resulted in a HELOC. Well, now all of a sudden our process is going to result in potentially a first lien HELOC product. Down the road, our process is going to result in a DSCR product. Down the road, our process is going to result in a piggyback product. So you see what I'm saying? Adopt the process. It's going to take you, what do we think, Alex? 2 minutes to run an inquiry?
Oh yeah, once you get used to it, it is so quick.
Yeah.
I think we timed you 2 minutes. I'll probably have to look up. I think I wrote it down somewhere. It was like 2 minutes, 13 seconds for you to do one.
Yeah, and the more you do, the faster, because you just know what the fields are. You get a feel for what the expectation is. It just gets faster and faster, quite honestly. So the opportunity is real. We're already, there was kind of a slowdown, typical, seasonality heading into the holidays, everyone thinking about turkey and Christmas trees. And now, as we've headed off into the new year, boy, right out of the gate, you all are rocking and rolling. So thank you for that, by the way. And Sherry also asked, how does self-employed income work? And that she had heard that the W-2 deposits would be the same. I'll try and decipher the question here a little bit, Sherry. Maybe two separate pieces to this, but self-employed, here's what I want to advise everybody. When you're having a conversation on a phone with a borrower that's self-employed, ask them how they pay themselves, if at all. Why would I say that? Well, you might have someone self-employed that has a corporation and they W-2 themselves from their corporation and they're on a regular payroll into their personal bank accounts. If all those things are true, you would want them to link to their bank accounts, right? They're really a wage earner for a company. If, in fact, they're a Schedule C borrower, well, the rules are the same there that we all love so near and dear to us, and that is Schedule C borrowers and oftentimes self-employed tax returns. The taxable income is greatly reduced. However, that would be the way for a self-employed borrower, is almost to just fast forward right to linking to their tax transcripts. Now, a little bit of good news about that. Unlike agency styled loans, we're only going to use the most recent required tax filing year. So like right now today, that's 2023 returns. We're not going to ask for 2022. We're not going to ask to do an average over 2 years or look at declining income. None of those things exist with us. So it's just linking to the tax transcripts. And that works, but it can be hard. It can be tough for self-employed for the usual reasons. It's not so much on our end as much as it is the usual reasons. So, and then you heard W-2 deposits would work the same. Wage earner deposits go, again, they're deposited into the person's personal bank account. That is really the path of least resistance, and those will sail through so fast you can't even believe. So I'm not sure the W-2 part. We actually don't review W-2s. We don't ask for W-2s or 1099s or tax returns. Think everything is digitally linked. So we're going to link to tax transcripts. We're going to link to their bank accounts to verify deposits, not review anything outside of pay stubs and award letters if needed. By the way, there's some great resources. We did a whole, and I'm sure it's still up on the YouTube channel, right, Alex? But we did a whole segment on income and on our YouTube channel. And so I encourage you for any of that. Make sure you go follow that YouTube channel. And then you'll be notified anytime new videos are posted. But a lot of tutorial videos in there.
There's some good content, not just recordings of this webinar. I'll post a link to the YouTube in the email I send out. I'm also going to send a link to, or not a link, I'm going to send a document about income verification. Keep in mind too, for self-employed, they have specific calculations when it comes to taxes. So it can be really beneficial. So really, I'd say if you want more information, review our content, and you can always schedule time with us too if you want to sit down either in a one-on-one or in a sales call.
Yeah, I love it. Now, Alex and Reef, I hate to do this, but as you know, I'm on site in our San Francisco office. I got to go jump back into a meeting. I think are we caught up on Q&A, Reef, or is there still more?
There's some more. I think you can handle them though. It's not too many more.
Oh, well, there's no question in my mind that you guys can handle them. That's why you're on the team, for crying out loud. But I didn't think you could handle the questions. Listen, big takeaway, please, everybody lean on the team. salessuccess@figure.com. They'll make sure you get the information. Alex will be sending out follow-up materials, including a link to the recording of this webinar, but huge improvements that have just launched. Use that LO dashboard without even saying a word. We already have several hundred conditions cleared as a result nationwide. So take advantage of it, dive in, reach out to the sales success team for additional questions and answers. Heck, you want to put time on the calendar? Let's jump on. It doesn't matter, right, guys? One-on-one or office meetings, you name it. We'll be there to help where we can. So team, Alex, as always, great job. I will talk to you guys later. Everyone else, hang tight with these guys. They're going to wrap up with you and answer any questions you might have. And Alex and we can recap later when I'm back on the road this afternoon.
Sounds fantastic. Have a good day, Tim.
Hey, thanks, guys.
Love that guy. All right, everyone, let's keep going here. So Heather asks, if using on a departing residence, is there a hit for early payoff? And can it be listed? It's typically not allowed. Good news. We can absolutely do HELOCs on listed properties. And I do want to kind of talk about that a little bit. So on that inquiry tool, it's going to ask you, hey, is this property listed or not? You can make that selection. So if it is a listed property, no big deal, because there's no prepayment penalty for the borrower, no fees for redraws either. I like throwing that in there. So if they are, if they have a listed property, they need to get some money to kind of help them bridge the gap a little bit, this is usually going to be the cheapest option for, say, like a bridge loan product. Couple notes to that. Number one, if it is selected as a listed property or is a listed property, there is a 2.99% origination fee flat. It will not be selectable. So just keep that in mind. It's going to set that origination fee. That's going to be the fee on there. You'll see that in the total loan amount, and something they still will have to pay back, obviously. And yes, to your question, it can be listed later. That's perfectly fine as well. Here's the big thing, and I want to throw this out here. Check with your internal teams. I cannot speak for every single person on the call, but I'm sure for a vast majority of you, there are certain EPO policies for your company. That is going to be if the borrower pays 90% or more within 16 weeks. 90% or more within 16 weeks, right? Now you're thinking to yourself, well, it's the whole point of listed property. Hey, good news, that EPO policy waived unlisted properties. That's where that strength really comes into play there. So what you're really selecting on that inquiry tool, if you're saying, hey, it's listed, you're saying, hey, I want to waive this EPO policy. We have another question here. When will Figure offer conventional or government loans? So, number one, I haven't heard about it yet, but right now we're working on, again, Piggyback, DSCR, but we have more and more rolling out. We're a technology company, and again, process equals product, as Tim would say it, right, Reef? So look forward to the future. I would say we have a lot going on this year, but as of right now, I can tell you, I've not heard anything in the pipeline so far. All right, Shane asked, does the application allow the client to select what they want to pay off before the initial offers? I have a client that won't qualify. DTI would be over 50% unless your credit cards and car are paid off with the proceeds. Yes, this is what's so nice about that. So, Shane, if you have your borrower, right, you do that inquiry, or let's say you're one of our partners with a referral code and you sent that to them. If their DTI is too high, if it is over that 50% mark, but everything else is perfect, we have an asset depletion screen. It is going to have them or you, if you're on the inquiry, go in there. You can restate income, obviously. You can state assets, right? Asset depletion, we all know that. But at the bottom, if you scroll down, it's going to list every single debt on there that can be paid off. So off that method soft pull, it's going to detect those and it's going to say, hey, these are the debts that can pay off specifically to help them qualify, which is now every single debt we can pay off, which is very exciting. So if they have credit cards, if they have personal loans, anything it detects on there, we can't manually add debts. So just know it has to be listed on there. But you'll be able to go there, same with your borrower if they're, started with a referral link, be able to kind of go through, select those and go, awesome. Now these will be what the offers are. And it'll show you in real time too. You can play around with it. You can modify it. I've done specific trainings around this feature before. So if you want to see more information, again, you can reach out to our team, but just know I'd say do the inquiry. It'll tell you exactly what debts they have to pay off. And you'll be able to see that too once you select those. Great. These are what your offers are considering you're paying off your credit cards. All right, my good friend Bob asks, refresh my memory. Can we pay off a current second lien HELOC with a new HELOC? We cannot right now. We are currently testing that. That is going to go live probably in a month. They are engineers though, so give us a little bit more time. We are going to have existing liens built into our IntelliDebt system. So just keep that in mind. Same as any other debts, you're going to see it on that screen saying, hey, we can pay these off. It is not live yet with our partners though. We've been testing it in our DTC channel as well as on the back end. So just give us a little bit more time and you guys will have that. Same question here. Can we pay off an existing? So again, yeah, Scott, just please give us a little bit more time here. I wish I could have it live today, but we just need a little bit more time than I think we were expecting. So again, give us about a month and then you'll be able to do so right there. All right, sometimes the lien balance isn't correct. Is there a way to show a mortgage or deed that shows the balance is paid off or a lower balance in the future? So a couple things to note here. And Reef, I don't know if you have some good information on this topic, but really specifically, the answer to that is just a flat no, because it is an automated system. We don't have any underwriters. Keep in mind what it can show, right, is it's going to show the original balance. It can be showing current balance on there. I would check what their offers are, right? If it still works with them, great, that's awesome. Just keep in mind, if you're looking at that, you're looking at the lien information, you can, again, we have some support lines. You can always ask questions, but it's not something we can correct. It's not something necessarily we can go in, manually type that in, get, let's say, existing documentation to show that. There are some rare exceptions where we can escalate it to our vendors. However, I would say as a generalized rule, if you look at that, their offers don't look good, then quite simply, look for a different product for that individual person, I would say. It's just a simple rule of automation, having no underwriters, I suppose.
Yeah, there could be a little bit of a lag, right? So if a big payment was just made on a mortgage, it might not be showing up as well. So just keep that in mind.
And Jason says, make the same payment and you'll pay the car loan off much faster. My first car payment was $310 a month. That was in 2015. I paid that off for 5 years. I do not have car payments anymore. My current car is a 2006 Mitsubishi Spider. It is my baby, and I will die with that car. So hopefully I never have a car payment ever again. Your borrowers may be different, though. So again, think about if a HELOC makes sense for them. That's my advice. Really monthly payment. All right, last question. If we have a file sitting in queue, but they need to pay off a debt to get more loans, do we need to resubmit the file? It depends on if that appears. So what'll happen there, right? You do the inquiry, it's going to show you those pre-qualified offers. Same thing if your borrower goes over, starts the application, they're going to get their own offer selection screen off the pre-qualification. If they go through the app, they're going to get to hard credit pull. We're going to do a final AVM. They're going to have the final offers. So what's going to happen there if they're doing it? They're saying like, hey, if I want to make adjustments to pay off the debts, it'll show them what's been pulled off there. However, right, if those debts originally were not pulled off that method pull, that's when you would resubmit the file. So if you've had one sitting in the queue, right, those debts haven't appeared, say because we've made that recent credit card enhancement, and you're saying, hey, those haven't appeared on there, for so-and-so reason, I'd say redo the inquiry, see what pulls on that new one. But if it's as simple as saying the borrower wants to make an adjustment to what they want to pay off and it's already listed, then they can just go in and make those adjustments either on the offer screen or the final offer screen. Did you say that you can use a HELOC on a current primary departing residence? Yes, it is very nice. Listed property, if it's not listed, maybe they want to list it later. Primary properties, we're good to go. We're good to go there. And this is, again, a very cheap way for them to get money quickly. If they're saying, hey, I just need some extra money, I want to go somewhere else, I need money for, X costs to get me somewhere else, this is a really good product for that because there is no prepayment penalty. But again, keep in mind in own internal EPO policies, unless it is currently listed, then that EPO policy is waived. All righty. Oh, a whole bunch of questions here. We are coming up here on time. I'm going to try to get through these as quickly as I can. Unfortunately, I do have a meeting here, both me and Reef, at 12. So if we don't get to your answers, please email us at Sales Success. And again, I will be sending out an email as well later today. All right, David asks or says, I have many borrowers who have a difficult time getting back to the login screen after starting the app. Is there an easy way to send a link without calling in? If they use the initial one that was sent out, it looks like a new application. So really specifically there, it depends on your organization. And the reason I say that is that each of our partners has their own website. And so that's something where I would say reach out to our team. We can get you the URL for that. I've done that before. I said, hey, borrower X, here's the URL, go to this URL. There's going to be a login button at the top. Click the login button. They can put in their email and either have a one-time passcode sent to that email, or they can enter their password if they remember it. So it depends on the borrower. Maybe they're logging in on a new device or something like that. But if you need to, you can reach out to us. We can snag you that URL. It doesn't have to be, that link from the inquiry or that referral or what have you. Reef is answering this, but it says, hey, do you go off a tri-merger score? It is Experian, and it is specifically the FICO 9, so keep that in mind. All right, last question, y'all, because then we will have to unfortunately leave you until 2 weeks. So this is live now or Friday. This is all live now. These are enhancements we made. The only thing that is new and upcoming will be the emails for the conditions. That should be going live this week, if not sometime early next week. we're still getting that finalized. You can go in and still do those conditions though, keep that in mind. But the first lien right in there, the credit card enhancements, conditions and lead portal, that is all live. So get out there, be successful, reach out to us at salessuccess@figure.com for anything you may need. Reef, do you have any final departing words before we end this?
I do not. Alex, great job. It was great seeing everybody, talking to everyone. Reach out to us. We're here to help you and support you. So have a great week. Be great.
Be great, everyone. Bye.